Time for another installment on my videos. I'm doing this one, I'll make it real brief, but it's on economics, on inflation, but also I want to splice in a little bit of the Putin Trump meeting and what the likely outcome is, because as of the time of me making this, I don't know the outcome. Anyways, regarding inflation, here's your numbers that just sort of came in. You have CPI, Consumer Price Index, at 2.7, and then core CPI, which excludes things like gas and other other tangibles that really should be included in, at 2.9, and that's almost 3%. The Fed's mandate, the Federal Reserve Bank, is to get interest rates, get inflation down below 2%, or 2% or below. And they have to balance that with their other bifurcated mandate, which is to keep people working and not have too high of an unemployment number. Okay, add into that the PPI came in 2 days ago, I think it was, at 0.9. Okay, the expectation from all the brainiacs on Wall Street, etc., and in the government was 0.2. This is month over month, but think about this for a second. That's almost a 1% increase. That's humongous. Why is that? What is that at the PPI level? What's PPI? Maybe I should explain that. That's producer prices. That is wholesale level. That is businesses out there trying to get material, get product in to make product and ship it out at retail. They're experiencing inflation. Huge. Where's it coming from? Let's see. Oh, I know. Tariffs. Duh. The tariffs that Trump has instituted are finally starting to kick in at the end user level, at the purchaser level. Okay, so before you get to retail purchaser, you got to get to wholesale purchaser, and that's, you wait till next month and thereafter, you're going to see a very spiked inflation, which is going to prohibit the Federal Reserve from lowering interest rates. They're not going to be able to lower the interest rates. And even if they do and throw the dog a bone and say do a 25 basis point cut, in other words a 0.25% on the low end, it's not going to do anything. The middle of the curve and the long end of the curve, so the 10-year and let's say the 30-year bond note, they're going up. And I would predict, and you can mark it right here, that the 10-year will be pushing 6%, just below, in about a year. I'm pretty good with chart analysis, technical analysis, and anybody that wants to take a look at the technical chart history of the 10-year bond can see what it's up to. The secular bull market in bonds, it has ended. And what's that mean? The bond prices go up as the yield goes down. As the yield goes up, bond prices go down. And you might say, well, why? Because if somebody bought a bond, whatever it is, at X price, and then 4 years later the yield is higher, then that bond is worth less. It's worth not as much because somebody can buy a bond on the open market and get a higher yield. Okay, so that's how that works. And you're got a real estate market that's based upon what? The 10-year note. Why? Because that's what mortgage servicers and originators utilize. And then they mark that up by, a couple percent, and that's your mortgage rate. So diverging here for a second in the real estate, you're going to have higher rates on interest on mortgages. You're going to have prices that are already high that are now breaking. They're breaking everywhere I'm looking. People, the retards that waited too long, or other ones that are just testing the market, they're realizing they're not going to get what Joe got down the street, in the height of the market between 20 and 22. So that's what you got. That's a huge part of our economy is real estate. So you're going to have crumbling real estate prices, and as I've said in prior videos, you can expect them to go down about 25 to 30%, which is back to the long-term mean. You're going to have higher interest rates. That's going to stagnate the economy. So you're going to have what's called stagflation. I'm old enough to remember it. Yeah, I was a kid, but I remember it in the 70s. And, all the advertisements on TV were, hey, it's an inflation fighter, because we had inflation, but we also had stagnation, and it was horrible. And it was real hard for Arthur Burns, who was the head of the Federal Reserve, to get it clamped down. And how'd he do it? He raised interest rates to like 20% or thereabouts. Yes, people were getting mortgages at 21% interest rates. And you might say, well, wow, how'd they do that? Well, because the prices of the underlying asset, the homes, were worth a hell of a lot less. So maybe somebody could afford the monthly stroke. That ain't true right now. So that means real estate, residential, is coming down. Residential real estate. Commercial is already in the tank. It's crapped out. And you may even see some banks go bust from that this year. Merging or splicing, like I said, over to the Putin-Trump thing, all I want to say about that is this. Our government, our officials, our negotiators are smoking crack if they think that they're going to get anything other than Putin to agree to keeping the conquered territories up to the line of the Donbass provinces on the eastern side of Ukraine, the western side of Russia, which are 90% ethnic Russian and Russian-speaking. And they're going to want and demand a neutral Ukraine without CIA bases in there, without bullshit that's been going on since 2014 when Victoria Nuland and the other embedded neocons in the government fermented a revolution to try to get what was it? They called a pro-Russian government, but it was just a neutral government out of Kiev. That's the capital of Ukraine. And the reason for that, as I've said in prior videos, was ancestral hatred by the neocons, which are mostly Jewish conservatives. They're not really conservative, but they're Jewish. And they hate Russia for past discrimination, past pogroms where the Jews were attacked. And things of that nature. They don't like ethnic Russians, and that's what that was all about. So that, combined with the fact that we agreed after the Soviet Union fell that we would not expand NATO to the border of the Russia, and we did, or up on the Baltic nations of Latvia, Estonia, and such, and Lithuania. There was a push to get NATO to expand into Ukraine. And at this point in time, as you may have noticed, yesterday's news, Ukraine launched a massive drone assault, massive, across the whole border region against Russia right before Trump was to meet with Putin here today to sabotage it. And there's no way they did that without the support of the Western European nations, NATO. And I'll conclude by saying this. If Trump was smart, he'd tell NATO to go jump in a lake, get out of NATO, let Europe be retarded and do what they want. If they want to poke the bear, which is Russia, then that's their business. We have no business giving money or aid or arms to Ukraine, and no business being in NATO at this point anymore. Our interests have diverged. They want war like they're prone to doing in World War I, 1914, World War II, 1939, then let them have it. But we should stay the hell out of it. So don't expect much from the Putin-Trump summit. I don't think there'll be an agreement, because what we have, I believe, as expectations won't be matched by what the Russians are willing to do. And that war is over. Russia's won it. And it's just a matter of how far they go and what they do. And if they go to Kiev and take it, then they're going to dictate the terms anyways of what the surrender is going to be. So if I were Trump, I'd say, hey, you guys can have the eastern provinces. we'll put a neutral government in there and find a way to sort of enforce the neutrality between the two powers and be done. But I don't hold out a lot of hope for that. So we'll see. Anyways, that's today's video. One other thing I'd add is my GoPro took a dump. It was an old GoPro 8 that I had sitting in a box for like a year and a half, and the whole thing just went kaplooey. So I can't really at this point do videos while I'm riding the mountain bike until I get another GoPro, because I don't know how the hell I'm gonna rig my phone to do that while I'm riding or doing other things. So anyways, we'll take care of that. Thanks for watching.